Hello and welcome to the Weekly Forex Outlook at XM.com. We'll be discussing the upcoming Bank of Japan meeting, as well as the US core PCE data and UK core inflation. I'm Maria Pachordes, and joining me to discuss all this is Senior Investment Analyst Haralambos Pissouros. So Haralambos, let's begin with the Bank of Japan, which will meet on Tuesday for the last time in 2023. What are we likely to hear from policymakers at this gathering, and what should yen traders look out for?
Hello, Maria. Yen traders seem to be sitting on the edge of their seats in anticipation of signals that the Bank of Japan is preparing to exit negative interest rates soon. To give you an idea, last Thursday, the yen surged on Governor Ueda's remarks, who talked about the possible options they have on targeting interest rates after they exit negative territory. But the yen pulled back the next couple of days after two reports noted that his comments were not intended to hit at a potential exit timing and that the bank sees the cost of waiting as not very high. Then the yen rebounded again following Wednesday's dovish Fed decision due to the narrowing yield differentials between the US and Japan. But in my opinion, the aforementioned Bank of Japan reports, combined with the fact that the bank puts a lot of emphasis on wage growth, suggest that policymakers may not hint at an imminent shift at this gathering. They may prefer to wait for April after the spring wage negotiations. Now, with inflation in Japan accelerating, the likelihood for businesses and labor unions to agree on another round of strong pay hikes next year seems to be very high. So I don't believe that this will be a non-event. Even the slightest confirmation that interest rates could exit negative territory at some point, maybe in April, could add more fuel to the yen's engine, especially with the market believing that the Fed will cut interest rates by around 150 basis points next year.
Okay, moving to the US now. After Powell sounded dovish following the recent Fed decision, the highlight this week may be the core PCE index for November. What are we expecting from these figures, and what reaction might we see in the dollar?
Now, as I already mentioned, the Fed appeared dovish this week. It revised down its dot plot to indicate that interest rates will end 2024 at 4.6% instead of 5.1% as indicated in September, while Powell said that higher rates is not the base case anymore. The outcome pushed Treasury yields and the US dollar lower, while it was cheered by equity and gold traders. Now, as you said, dollar traders may turn their attention to the core PCE index for November, but with the core CPI rate for the month remaining unchanged, the PCE rate may also have held steady at 3.5%. This is unlikely to shake expectations regarding the Fed's future course of action, but a miss could encourage investors to continue selling the dollar and buying stocks. On the other hand, an upside surprise is unlikely to trigger a strong counter move, as market participants appear willing to react more to data and headlines validating their view.
And finally, in the UK, after the BOE's hawkish hold, pound traders will turn their attention to UK inflation data for November due out on Wednesday. What are we likely to see there, and what's the outlook for the pound?
Yes, indeed, the Bank of England stood out this week. 3 members actually voted for a rate hike, and most of the committee said that it is too early to conclude that service inflation and wage growth are on a firmly downward path. Thus, some further, but still modest, decline in underlying price pressures may not be a reason for the Bank of England to change its mind, and is unlikely to severely hurt the pound. Nonetheless, according to UK overnight index swaps, the market continues to believe that no more hikes are warranted and that around 115 basis points worth of rate cuts may be needed by next December. Perhaps they are more worried about the performance of the UK economy, which stagnated in the third quarter rather than the stickiness of inflation. Therefore, should upcoming growth-related data continue to point to deep economic wounds, the pound's advance may run out of fuel at some point in the not-too-distant future, as investors insist that rate reductions may eventually be needed. In that respect, the UK retail sales for November may be of interest, and they are scheduled to be released on Friday.
Arlambos, thanks so much. This was the Weekly Forex Outlook here at XM.com.